Let's be real. Nobody opens a bakery or launches a tech startup because they're just dying to fill out tax forms, right? I mean, tangible personal property tax return doesn't exactly scream thrill ride. It sounds, well, like a headache. But welcome to this explainer, because today we're taking this dry, kind of tedious compliance task and flipping it into a totally stress-free checklist. If you're doing business in Florida, this isn't just bureaucratic red tape. It's literally the key to keeping your doors open and your finances safe. We're going to break down exactly what the state actually wants from you and how to hand it over without pulling your hair out. Okay, let's dive into this. 67. That is the number of counties across the great state of Florida. And from the Panhandle all the way down to the Keys, this one single required form unites every last one of them. The stakes here are huge. Whether you're running a cozy little coffee shop down in Miami-Dade or managing a massive manufacturing plant up in Duval County, if you own physical stuff for your business, you're playing by the exact same rulebook. So what is this magic document? It's Form DR-405. This is the official paperwork for reporting your tangible personal property tax. Now, here's a fun little quirk. Your specific local county appraiser might tweak the look of it a bit, slap their official seal on top, maybe mess with the color scheme. But the core structure, that is strictly locked down by the Florida Department of Revenue, meaning the essential data points we're about to cover are universally required no matter whose desk this form eventually lands on. So, here's our game plan for tackling this together. First, we'll hit the basic identification, jump right into the heart of the form, figure out the leased equipment, and finally wrap up with the signature. All right, kicking things off at the top, I completely understand that looking at a blank tax form can feel super overwhelming, but this first section is actually a breeze once you know the drill. Obviously, you're going to need your business name and your FEIN, your federal employer ID, but here is the kicker. You absolutely must provide the physical street address of the property specifically where it was located on January 1st, not where you moved to in April. Actually, scratch that, not even where you were operating last November, January 1st. That exact date serves as a frozen snapshot in time for this entire return. While we're still on the basics, there's one more key puzzle piece you need to provide: your property's folio number or parcel ID. Now, if you're sitting there scratching your head thinking, where on earth do I dig up some obscure 13-digit number? Well, here's a pro tip that's going to save you so much time. It almost always perfectly matches the number on your real estate tax bill. Boom! Just pull that bill out of the filing cabinet, copy the number over to the DR-405, and you are golden. So, the crucial point is, we're now leaving those basics behind and stepping into the absolute heart of the form. I want you to focus in here because this is where the state does its actual math, and frankly, it's where the most reporting mistakes happen. You're strictly required to list your tangible assets, but you can't just slap a giant aggregated number on a line and call it a day. Nope, you have to break it down. First, by asset class, grouping things into buckets like office furniture, heavy machinery, or your computer systems. Then you pair that with the exact year acquired, and finally you have to report the original installed cost. And listen, installed cost is a vital phrase. It doesn't just mean what you paid on the receipt. It includes whatever it costs to get that item delivered, set up, and fully functioning. Think about the freight and installation fees for, say, a massive new commercial pizza oven in a kitchen. It's basically a precise historical inventory of the physical things that make your business run. Okay, so right after that mean asset list, we hit a speed bump that trips up so many veteran business owners: leasing. The form forces you to draw a very hard line between two totally different, kind of tricky scenarios. On one side, you have equipment you are leasing from someone else, meaning the physical items are in your possession, but you don't own them, like that incredibly expensive commercial printer you just rent for the office. On the flip side, you have equipment that you actually own yourself, but you're renting it out to other people. You have to report both scenarios, but they are treated very differently for tax purposes. Keeping these two buckets crystal clear in your mind and properly categorized on the paper is absolutely vital to getting this right. Well, look at that, we finally made it to the finish line. But I really need to warn you about the ultimate trap right here at the end. You've done all this heavy lifting, right? You've categorized every last computer, you've tracked down your January 1st address, you've crunched the numbers on your installed costs. But all of that effort means absolutely nothing if you forget this final step. It is a mandatory, absolute requirement for the business owner or a legally authorized agent to sign and date the document. That one simple stroke of a pen, that's what actually makes the entire return legally binding. Which brings us to our final thought to wrap up this explainer. Is an unsigned form really worth the penalties? Because I assure you, the Florida Department of Revenue does not see a missing signature as a cute little clerical error or a simple oopsie. To them, an unsigned form is instantly considered completely invalid. It's literally like you never filed it at all. And guess what an invalid return triggers? Immediate, snowballing financial penalties that you could have totally avoided. So, as you gear up to tackle your tangible personal property tax return this year, I'll leave you with this. Are you going to take those extra 2 seconds to double-check that signature line before you submit it? Thanks for taking the time to learn with me today, and here's to making your compliance an absolute breeze.